All right, traders, here is your end of day recap. This is Christian from Tribeca Trade Group. And a little bit of a uptick in volatility today. We had the SPY finish down a little more than 0.5%. Was at one point positive on the day, but gave it back. The Qs, which were the outperformer on the day, were all over the place. They did finish up in the positive, up a little bit more than about 0.2%, and IWM was to the downside. That finished down almost 1%. Diamonds were down 1% as well. A lot of that has to do with Walmart. Walmart reported earnings. They were down 10%. They are a component in the Dow, which of course is only 30 names, but yeah, so we kind of had. I feel like there's a lot to talk about today. So I've got up in front of you the chart of the S&P. This was the level that we saw this morning that we talked about. So we're holding it. So why do I look at these? They're just really good support and resistance levels. This is this week's. I'm on the 1 hour bar. This is this week's value area for S&P. So really, if we hold above it, I would view that very positively. If we fall into the value area, we may have some more volatility that picks up, especially because the next area of support, maybe you might have a little bit of support on last week's top of value. This acted as good support last week. If not, maybe a little support here, and if not, down to 2647, I think is your next area of support. So, which is a decent ways down. So that's why I'm kind of watching very closely. So this level to watch is 2707 and 3/4, or if you don't pay attention to S&P futures, I'll give you the level in SPY. But again, that's why I use the value areas. They provide really good support and resistance levels. Again, you could look at last week's. We came right back. We tagged the top of value last week and we rallied. So we tagged it again. So that's 270.49 to watch. So it's very close. It's very similar level S&P futures, but I know some people look at SPY more than S&P futures. But really, if you're pure technical, that's your level to watch. The Qs, I think if you look at NASDAQ futures, we came in and we touched that as well this morning and we rallied. Looks like we did not get over last week's high. So what to start with? I guess the good or the bad. I always start with the bad, and then kind of make my way over and get the bad news out of the way first. But yeah, I mean, it seems like we definitely have. Let's see if I can bring this up here. Oh, it's not letting me bring this up. Yeah, here we go. Here's the VIX. This is something that I have at. You can see I have it on another screen. But while the VIX is above 20 and really the upper teens, it's something that I want to pay attention to. It just means that there's expectations for higher short-term volatility in the market. And if you look a couple times here, we try to break this level. You can see a lot of consolidation around this trend line. This is the 200 period moving average, and it's just funny how you could see the consolidation around this line. It's really sticky. So we did start to break down here, and what happened was, we had a bond auction today. And the bond auction did not go well. There was not a good demand for the bond auction, and we immediately started to see the VIX go up and equities go down. If you go back to the S&P chart, maybe on the 5 minute, kind of see what I mean here. So that was right around here where this bond auction was on this candle, and the market didn't like it. So it's a little bit different to see us take a cue from the bond market. Normally the market is moving on fundamentals and some other factors, but I think it's really paying attention to the bond yields. I saw somebody on Twitter talk about today, well, bond yields are not a concern until we get to X percentage. That's really where historically bond yields, treasury yields have really impacted equities. I'm not so sure if I would use that. You have to go back to history and say, well, what was the national debt at those levels? And I don't know what this person was quoting, 3 or 4% or 5%. What was the national debt back then? It was a lot smaller. So I'm not a bond person. I don't pretend to be. But when something is moving, and causing and the market is reacting to it, yeah, I would take notice of that there's possibly something just doesn't feel right in the marketplace, and I would pay attention to it, and not just say, oh, this shouldn't happen. I mean, you kind of have to have an open mind. As I've said in the trading room today, you don't want to be a perma anything. You don't want to be a perma bull. You don't want to be a perma bear. You want to acknowledge the information that comes in and assess. So tomorrow we've got a couple more bond auctions. Tomorrow, 11:30 and 1 o'clock Eastern is when we have those bond auctions. So we'll see. I hope that it's a non-event, and we can get back to watching the technicals and things kind of work the way that they do. But if something is happening here, I want to take note of it, and I want to be able to adjust my decision making based on that. So that's that. We also have Fed minutes. The reason why I'm talking about the events for the week, because there's been a ton of index puts that have been trading. So I'm going to go into the positives. I'm going to go into the call buying that we saw in single names. But again, I want to talk about the negative first. And man, there has been just a ton of put buying. This started late Friday afternoon. There just seemed to be, like rapid fire Qs and SPY puts going up, and that's how it was too today. And you can see, just so that I'm not making this up, because I think a lot of people who quote option flow, they don't like to mention puts for whatever reason. I don't really understand why. It is what it is. If you're reading the tape, you want to pay attention to both. You don't want to just say, oh, well, I'm just going to pay attention to the call flow. I don't know. It's kind of childish to me, but I want to make note of what's going on in the tape, both bearish and bullish. But again, you could see, I think the one that's good about this is all of the index puts. I would say not all, but the majority of the index puts that are going up in SPY are this week's. So again, maybe they're worried about the Treasury auctions, maybe they're worried about the Fed minutes, and maybe it's some other event that I don't know about. But you could see these were swept. These were swept. These were swept. These were swept. And it goes on and on and on if you go further. Let's see. This is not wanting to. Well, I'll show you over here. I'll just have to rely on my blotter. But you can see all the put. I mean, all these puts. Again, most of them for the Qs. 162 puts. 164 puts. Again, these are all sweeps. These are not just your mid-market, non-aggressive orders. These are aggressive orders. I mean, they bought these in the morning. They bought some in the afternoon too. So again, higher than normal puts. So what to take away from this? I would say, again, most of the orders, there's a couple March orders mixed in here, but most of them are going up for this week. So keep in mind, if they're buying March puts, maybe they're just, they might unwind them too by the end of the week. So, it just appears that they're looking for some type of short-term volatility. So how can you what's your takeaway from that? If we do get a little bit further of a market dip, notice the positioning here and say maybe it's just a short-term, they're expecting some short-term move down here. And if you have cash as a position, you could deploy that cash into a little bit of market weakness. That's how I would look at it. And I also wouldn't get over the tips of your skis with taking on risk this week, considering that it's a higher than normal put activity. Now, I hope that they're wrong. I'm not rooting for the market to go down, but I'm just taking note of this. The other thing, now we'll start to talk about some of the positives, right? We talk about how support held for the S&P. That's a good thing. Also, look at the volume in the SPY. It was really pretty light. Oops. Sorry, I don't want to close this. But you can see this is the volume, today's volume as a percentage of the average 30-day volume. So today's SPY volume is only is 30% less than normal. So that's good. If you remember all the volatility that we saw a couple of weeks ago, the SPY volume was around double the average volume. So it could also just be that all the market participants are not back as well today. But I don't know. I'm not sure if I would go with that, but certainly it doesn't look like anybody's pressing on the accelerator to short in the index ETF. So I view that as a good sign. All right, so let's talk about the positive. So this also kind of, I think, is a pretty good signal for the market. Look at the semiconductors. Oh my goodness. At one point, the SMH ETF was up 2.5% on the day. And we saw just call buying in just about everything in the semiconductor space. A lot of Intel calls, Micron calls, which we've seen just about every day now for the last, week and a half. So that's been continuous. We also saw things like Marvell calls, MRVL. We saw microchip calls, MCHP. We saw a little bit of NVIDIA calls that went up. So my view on this, I'll give you my view on all the call buying in the semis today. There was a couple, Cree was another one that we saw weekly calls. But it just felt like almost every semiconductor was being bought today. So I kind of view this, once the semis are up 2.5% and people are buying around the highs, I kind of view it as the dumb money. The smart money was no, I'm not saying that that semis can't go up higher. I think they're actually in value now for the month, and they look pretty good. But I view the smart money that we've been noticing was the Micron call buyer a week and a half ago. Analog devices, they bought a big block of June calls in ADI, analog devices. They bought a big block of Intel calls about, I would say, almost 2 weeks ago. So really, that call buying, I think, was the smart money when nothing was going on, like all the way in here. I think even Intel was bought in here first before we bottomed. And then Micron was bought in here. I think analog devices was bought in here as well. But that, to me, is the smarter money. People buying, putting a big chip down when the market really looks ugly, versus now there's big momentum and now everybody's grabbing every little semiconductor that's out there. I mean, to give you an example, we saw this last week after the CPI report, just in a different group. We saw this in the gold miners on this day. Everybody was buying, on the tape. We saw all kinds of GDX call buyers, GDXJ, GLD call buyers, and then look at what happened. It had momentum, and it completely fell. They were buying into momentum, and that is dumb money. So that's an example. Now, again, I'm not saying that that's going to happen with the semiconductors. A lot of the buying also that we saw was, there was some further out call buying in Intel, which I think Intel looks pretty good too in the charts. It's not even, hasn't even gotten back to where it reported earnings. So I think this looks like a pretty good chart. If you want a little bit of confirmation, I mean, it did close above value, maybe above this level, which this is where it gapped up after earnings, but it looks like it's getting back into this earnings gap that we saw. But I think it looks pretty good. It's an MACD crossover. So they were buying, I think it was May calls, some March calls, as well as January calls in Intel. And then also there was a lot of other transactions that hit. Microsoft, which has been a repeat name. I already mentioned Micron. They bought a little bit of THO and WGO, kind of similar names. They both report earnings in March. ATVI, these went up mid-market, but I still think it's kind of interesting to see that many calls go up. I don't think that they're selling those calls. They may not have just gone up aggressively. There was a little bit of energy call buying as well this morning. Names like there was CVX weekly calls. Again, not a huge order, but kind of interesting to see some call buying. MPC was another name that saw some call buying. Then there was this big block of USO. Sorry, it was not a block. It was a lot of small prints that added up. So, it looks like somebody's might be expecting oil to go higher in the short term. There was also a nice big Amazon call buyer. There was a nice big Facebook call buyer. 5,000 of the May 80s. I made this trade into a call spread. We talked about this a little bit last night in yesterday's members only webinar. Something like this comes in, Facebook May options. You don't have to pick exactly what they purchased. I think that's a big misnomer in terms of option activity. A lot of I think beginner traders, they think that they have to buy the exact same contract. If it's a very illiquid name, sure, there's going to be more liquidity in that name. But something like Facebook, it's a very liquid option name. So if you don't want the May calls, I made it into a call spread, looking for this to go, maybe into value and so forth. I thought it was, even though his Facebook fell apart today, I'm in May, so I've got plenty of time, and I of course want trades to work right off the bat, but this one did not work off the bat. But still, I think they had good earnings, and somebody's buying calls into the mush. It is above. It's got the 200-day moving average support, which is a little bit far away. But it's got to get over the 100-day, and it's got to go over the 50-day moving average, which coincides with the bottom of values. So it's got some decent work to do. They also bought some weekly puts, but maybe looking for some momentum to the downside. So we'll see how that works out. And again, sometimes the best call option orders go up when the stock's really not doing anything and kind of looking a bit uncertain and ugly. Couple other trades that went up. I have to check this Mylan versus open interest. NTNX was another name. Besides the semiconductors, another group that's been very strong that I talked about last week is this enterprise software group, or just tech and software. This is the IGV ETF. Really nice looking. Hit a 52-week high today. Again, I think I talked about that maybe in Wednesday or Thursday's video about the strength that this group has. But I like a few different names in here. Adobe, which we saw call buying last week, hit a 52-week high. And then you've got some smaller cap names. This name Vive reports earnings next week. But just recapture the 200-day moving average. So it did this here and kind of fell back. But I don't know. Maybe this time might be the third or fourth charm for this to retake the 200-day moving average. I think it looks like an interesting chart. But this whole group, like I said, Microsoft is in this ETF. Actually, let me show you the movers for the day, and then we'll call it a day. Let's just wait for this to come up here. Well, it doesn't want to come up. You could see Salesforce, Oracle's in here, Activision, Blizzard. Oh, there it goes. Yeah, so Hubs, RNG, a couple small cap names. ServiceNow, which has been absolutely on fire. Workday, which has been another strong name. I'm not even sure what this name is. BL, this is Blackline, was up 4.4%. But in any event, there's been a lot of strength in this group, even though Snap was down 7.3% on a downgrade. But that seems to be where the strength is. Also, the Chinese internets did pretty well. There's a couple upgrades in the space today that we talked about. Had a couple traders take this in the room today. Momo, still underneath the 200-day moving average, but was up 4.2%, I think, on that upgrade or initiation of a buy. YY also looks pretty positive, but reports earnings in about a week. All right, so that's it for today's video. Thanks for watching. Again, a lot of things going on, both on the good side and a little bit short-term on the bad side. So, the takeaway from that is this week might be a little bit bumpy, but that's a very short-term. We've only got a couple days this week. This week is obviously a shortened week. We got Wednesday, Thursday, and Friday, and most of the puts and the big index puts that they're buying are basically just for this week's expiration. So we'll see how it goes. Thanks for watching, and have a great night.